The U.S. stock market continues to show signs of a correction. The key stock indices closed the trading week in the red. On September 20, the equity market extended its drop, with the indices falling by 2%. The main reason for the current weakness is the rush of large investors to close positions before the Fed's meeting scheduled for September 22nd. The regulator is widely expected to announce the tapering of the bond buying program. The reduction is likely to begin in November-December at a pace of $15 billion per month until the middle of 2022. The Dow Jones shed 600 points last week, dropping to 33,400. Prior to this, the index declined to 33,800 due to negative news from China. Bears flexed muscles after Evergrande Group, one of the most prolific property developers in China, informed investors of financial difficulties. So they are afraid that the company's default will adversely affect the entire sector. Market participants learned this news yesterday. This is why shares of manufacturing companies have incurred losses following this news. Despite the slight recovery of some shares, analysts predict a further decline in the index to 33,700 or 33,600 points. S&P 500 showed a similar dynamic. It fell on Monday to 4,310 due to negative news from China. Now it's trading at 4,400 points, yet analysts expect the resumption of a downward movement to 4,300 and below. The catalyst for further decrease may be the results of the Fed's meeting. The Nasdaq Composite also showed weakness. Its quotes had been trading steadily almost for the whole week, yet on Friday it slid down due to bearish pressure and now is trading at 15,140. However, analysts envisage a decline to 14,900 and then even lower. And now let's take a closer look at the shares. Among the largest U.S. companies, only the shares of two companies managed to close the day in the black. Pfizer and Eli Lilly shares gained 0.7% and 0.6% respectively. About 40 other companies incurred hefty losses. Tesla and Nvidia recorded the biggest drop of 3.8% and 3.5% respectively. Investors are also concerned about the approach of the deadline for raising the limit on the debt ceiling. U.S. Treasury Secretary Janet Yellen has more than once called on Congress to raise the debt ceiling. Otherwise, the U.S. Treasury will run out of money to pay its bills in October. Apart from that, investors are braced for the upcoming Fed meeting. The regulator is highly likely to announce the reduction of the QE program, which is bearish for the stock market. You've watched Weekly Financial Review with me, Anna Kasatkina. Stay tuned.